Welcome to Mastering Fundamental Analysis for Trading Success. I'm your host, guiding you through this complex yet rewarding world. Whether you're a seasoned investor or just starting, understanding the fundamentals is crucial for making informed trading decisions. Hit that like button and subscribe to our channel to stay updated on valuable insights like these. In this video, we'll demystify fundamental analysis, providing a clear framework for evaluating investments. We'll delve into researching companies and Forex, uncovering the essential factors to consider. From deciphering financial statements to understanding market trends, we'll equip you with the knowledge to make smarter trading decisions. Fundamental analysis is the cornerstone of successful trading. It empowers you to look beyond the surface, dissecting financial data to understand a company's true worth. By mastering this skill, you gain a significant edge in the market, identifying undervalued opportunities and mitigating potential risks. Imagine having the ability to predict a company's future performance with a reasonable degree of accuracy. Fundamental analysis provides you with the tools to evaluate a company's profitability, financial health, and growth potential. This knowledge empowers you to make informed decisions aligned with your investment goals. Get ready to embark on a journey into the heart of fundamental analysis. We'll equip you with practical strategies and techniques used by seasoned traders. From analyzing financial statements to evaluating management effectiveness, you'll gain a comprehensive understanding of this powerful approach. Throughout this video series, we'll break down complex concepts into easily digestible segments. We'll use real-world examples and case studies to illustrate the practical application of fundamental analysis. Get ready to transform your trading approach and unlock new levels of success. Before investing, thorough research is paramount. This involves delving into company financials, industry trends, and macroeconomic factors. For companies, reputable sources like the Financial Times, Bloomberg, and Reuters provide valuable data. When analyzing Forex, resources like investing.com and Forex Factory offer insights into currency pairs, economic calendars, and market sentiment. These platforms provide real-time data, charts, and analysis to aid your understanding of currency movements. Remember, research is an ongoing process. Markets are dynamic, and staying informed is crucial for success. Utilize reliable financial news outlets, subscribe to industry newsletters, and follow relevant social media accounts to stay ahead of the curve. Financial statements are the bedrock of fundamental analysis. These documents, including the balance sheet, income statement, and cash flow statement, provide a snapshot of a company's financial health. The balance sheet outlines assets, liabilities, and shareholder equity. The income statement details revenues, expenses, and profits over a specific period. The cash flow statement tracks the movement of cash both in and out of the company. Analyzing these statements reveals profitability, debt levels, and cash flow generation. Understanding key financial ratios, such as price to earnings, debt to equity, and return on equity, is essential. These ratios provide insights into a company's valuation, financial leverage, and management effectiveness. While financial statements are crucial, qualitative factors are equally important. Consider the company's management team, competitive landscape, and industry outlook. A strong management team with a proven track record is a positive sign. Evaluate the competitive landscape. Is the company operating in a highly competitive industry with low barriers to entry, or a niche market with a strong competitive advantage? Understanding the industry's growth potential is also vital. Factor in macroeconomic conditions. Interest rates, inflation, and economic growth can significantly impact a company's performance. Consider these factors when making investment decisions. Delving deeper into financial health involves scrutinizing a company's profitability, liquidity, and solvency. Profitability ratios, such as gross profit margin, operating profit margin, and net profit margin, reveal a company's ability to generate profits from its operations. Liquidity ratios, including the current ratio and quick ratio, assess a company's ability to meet its short-term obligations. Solvency ratios, such as the debt-to-equity ratio and debt-to-asset ratio, measure a company's long-term financial leverage and its ability to repay its long-term debt. Analyzing these ratios over time helps identify trends and potential red flags. For instance, a declining gross profit margin might indicate increasing competition or rising input costs. A high debt-to-equity ratio suggests a company is relying heavily on debt financing, which could pose risks if profits decline. A company's management team plays a pivotal role in its success. Evaluating management effectiveness involves examining their track record, leadership style, and corporate governance practices. Look for experienced leaders with a proven track record of value creation and ethical business practices. Investigate the company's corporate governance structure. Strong corporate governance ensures transparency, accountability, and protects shareholder interests. Look for independent board members, clear reporting lines, and ethical business practices. These factors contribute to long-term sustainability. Furthermore, consider the management's capital allocation decisions. Have they been investing wisely in growth opportunities or squandering resources on ill-advised acquisitions? A track record of prudent capital allocation is crucial for long-term value creation. No company operates in a vacuum. Understanding the prevailing market conditions is essential for successful investing. Analyze the industry dynamics, competitive landscape, and macroeconomic environment. Identify the industry's growth potential and the company's position within that landscape. Evaluate the competitive intensity within the industry. Are there high barriers to entry, or is it a highly competitive market with low switching costs? Understanding the competitive dynamics helps assess the company's pricing, power, market share, and long-term sustainability. Macroeconomic factors such as interest rates, inflation, economic growth, and government policies significantly impact business performance. For instance, rising interest rates can increase borrowing costs for companies, impacting profitability. Consider these factors when evaluating investment opportunities. Staying abreast of company-specific news and market sentiment is crucial for making informed trading decisions. Track news releases, earnings reports, industry trends, and analyst ratings. Positive news, such as strong earnings beats or new product launches, can boost investor confidence and drive stock prices higher. Conversely, negative news, such as missed earnings targets or regulatory setbacks, can negatively impact investor sentiment and lead to stock price declines. Utilize financial news websites, social media platforms, and investment forums to gauge market sentiment. Remember, news and sentiment can significantly impact stock prices in the short term, creating both opportunities and risks. By staying informed and understanding the potential impact of news flow, traders can make more informed decisions. Long-term investment success hinges on identifying companies with solid fundamentals poised for sustained growth. This involves looking beyond short-term market fluctuations and focusing on intrinsic value. Fundamental analysis provides the tools to assess a company's long-term prospects. Investors use fundamental analysis to evaluate a company's financial health management quality, competitive position, and industry outlook. By scrutinizing financial statements, investors can assess profitability, debt levels, and cash flow generation. Strong and consistent financial performance is a hallmark of a promising long-term investment. Furthermore, assessing management effectiveness is crucial. A competent and ethical management team with a clear vision for the future can navigate challenges and capitalize on opportunities. Look for companies with a history of prudent capital allocation innovation and a commitment to shareholder value creation. One of the primary goals of fundamental analysis is to identify undervalued companies. This involves comparing a company's intrinsic value to its current market price. If the intrinsic value is significantly higher than the market price, it suggests the company is undervalued and represents a potential investment opportunity. Investors use various valuation metrics, such as price-to-earnings ratio, price-to-book ratio, and discounted cash flow analysis, to determine intrinsic value. These metrics consider a company's profitability, assets, and future cash flows to arrive at a fair value estimate. However, valuation is not an exact science. It's essential to consider qualitative factors such as management quality, brand value, competitive advantages, and industry dynamics. A holistic approach combining quantitative and qualitative analysis enhances the accuracy of value identification. Markets are inherently volatile, subject to unpredictable swings driven by economic news, geopolitical events, and investor sentiment. During periods of market turmoil, companies with strong fundamentals are better positioned to withstand downturns and emerge stronger. Companies with robust balance sheets, low debt levels, and strong cash flow generation are less susceptible to economic shocks. They have the financial flexibility to weather storms, invest in growth opportunities, and maintain dividend payments, even during challenging times. Moreover, companies with durable competitive advantages, such as strong brands, loyal customer bases, and innovative products or services, are more likely to maintain their market position and profitability, regardless of market fluctuations. These qualities provide a buffer against volatility. Numerous examples illustrate the power of fundamental analysis in long-term investing. Consider Warren Buffett, widely regarded as one of the most successful investors of all time. Buffett's investment philosophy centers around identifying companies with a wide moat, meaning they possess sustainable competitive advantages. Another compelling example is Peter Lynch, renowned for his tenure at Fidelity Magellan Fund. Lynch advocated for investing in what you know, emphasizing the importance of understanding the businesses you invest in. He believed that individuals could gain valuable insights through their own experiences and observations. These investors' success stories highlight the importance of a long-term perspective, a deep understanding of businesses, and a disciplined approach to investing based on fundamental analysis. By following these principles, investors can increase their chances of achieving their financial goals. While often associated with long-term investing, fundamental analysis also holds immense value for short-term traders. Traders can leverage fundamental insights to identify potential trading opportunities arising from market inefficiencies, news events, and earnings releases. For instance, a trader might use fundamental analysis to identify a company with strong earnings growth potential, but whose stock price hasn't yet reflected this positive outlook. By taking a long position, or buying shares, before the market fully prices in the expected earnings beat, the trader aims to profit from the anticipated price appreciation. Conversely, if a trader identifies a company with deteriorating fundamentals, such as declining revenues or shrinking profit margins, they might take a short position or sell borrowed shares, anticipating a price decline. The goal is to repurchase the shares at a lower price, covering their position and pocketing the difference as profit. Event-driven trading involves identifying and capitalizing on trading opportunities created by specific events, such as earnings announcements, product launches, mergers and acquisitions, or regulatory changes. Fundamental analysis plays a crucial role in evaluating the potential impact of these events. For example, if a pharmaceutical company announces positive clinical trial results for a new drug, a trader using fundamental analysis might assess the potential market size for the drug, the company's competitive position, and the regulatory landscape to determine the likelihood of approval and commercial success. Based on their analysis, the trader might initiate a long position, anticipating a surge in the company's stock price if the market reacts favorably to the news. However, event-driven trading requires careful risk management, as not all events unfold as anticipated, and market reactions can be unpredictable. While distinct disciplines, fundamental analysis and technical analysis can complement each other effectively, providing a more comprehensive view of the market. Fundamental analysis focuses on intrinsic value and the underlying drivers of a company's performance, while technical analysis examines historical price patterns, trading volume, and market sentiment to identify trends and potential turning points. Traders often use technical analysis to identify entry and exit points for trades based on chart patterns, support and resistance levels, and momentum indicators. By incorporating fundamental analysis, traders can confirm technical signals and filter out false positives. For instance, a trader might identify a bullish chart pattern suggesting an upward price move. However, before initiating a trade, they would analyze the company's fundamentals to ensure the bullish outlook is supported by strong financials, positive industry trends, and a competent management team. This combined approach enhances the probability of successful trades. While fundamental analysis is a powerful tool for both long-term investing and short-term trading, it's essential to acknowledge the inherent risks. Markets can remain irrational longer than investors can remain solvent. Short-term price movements are often driven by sentiment, speculation, and news flow, which can deviate significantly from underlying fundamentals. Traders must be prepared for periods of heightened volatility and unexpected price swings. Fundamental analysis might suggest a company is undervalued, but market sentiment or external factors could drive the price down further in the short term. Therefore, risk management is paramount. Moreover, fundamental shifts in a company's performance, industry dynamics, or the macroeconomic environment can occur, rendering previous analyses outdated. Traders must stay informed, adapt to changing circumstances, and be willing to adjust their positions if the underlying fundamentals deteriorate or their investment thesis no longer holds true. In conclusion, mastering fundamental analysis is an empowering journey for any investor or trader. By grasping the core principles we've covered, from dissecting financial statements to understanding market dynamics, you equip yourself to make more informed decisions. Remember, knowledge is your most valuable asset in the financial markets. Whether your goal is long-term wealth creation or short-term trading profits, a solid understanding of fundamentals provides a significant edge. It enables you to cut through the noise, identify value, and manage risk more effectively. Embrace the learning process, practice diligently, and never stop seeking knowledge. As you progress on your investment journey, remember that fundamental analysis is not a one-time event, but an ongoing process. Markets are dynamic, businesses evolve, and economic landscapes shift. Stay informed, adapt to changing circumstances, and continually refine your analytical skills.
Check one, check.
Thank you for joining us on this exploration of fundamental analysis. We've covered a lot of ground, from the basics to more advanced concepts, providing you with a solid framework for making informed trading and investment decisions. Remember, this information is given for educational and interest purposes only and should not be considered as financial advice. Your journey to financial mastery starts now. Apply what you've learned, seek out new knowledge, and never be afraid to ask questions. The more you understand about the markets and the forces that drive them, the better equipped you'll be to navigate the complexities and achieve your financial goals. Thank you for watching. Don't forget to like and subscribe to our channel for more valuable insights. Until next time, happy investing.